one thing I caught is Keppel Data Center Reit. And this is the reason why. You can see that this stock actually dropped. Oh, yeah, I actually covered it. The price was about $3. Can you all see? Okay, sorry, this was in 2020. Actually went up to $3 and it actually dropped all the way to below 2. Okay. The point so of course it's actually quite exciting to me lah. The question here is it reasonable or not? Is it reasonable for this drop? So that's why I actually bring up this stock to analyze further to see whether, hey, is there anything that justify this drop lah? So of course I don't really see a very strong justification. Okay. At the end of the day, every stock has their pros and cons. Every stock has their good point and a bad point. So this is the reason why every time I want to do 5 stocks. If you actually want to find a perfect stock to buy, okay, buy it tomorrow, confirm make money one. Sorry lah, don't have. Don't have. So end of the day, okay, when we actually go through these 5 companies, you can see that, okay, I'll actually share with you why I think this is interesting. I will also share with you the bad points of the company. Okay. Then, of course, you say, hey, 5 things good, 5 things bad. How to decide? Okay. So, of course, very difficult. And end of the day, really how to decide is we compare the 5 different stocks. We actually compare the 5 different stocks. After comparison of 5 different stocks, that is easier for you to see, oh, okay, this stock got 7 things good, 3 things bad. That stock got 3 things good, 7 things bad. Then maybe I prefer this stock. Then probably from this perspective, then you can actually choose better. So after I share I'll share with you on the 5 stocks, I will actually ask you for your preference. So maybe you want to pay attention and check me what's your preference. Okay, in that case, for Keppel DC Reit, so this is the one that caught my attention. The price came down. I don't find anything sustainable or significant enough to cause this, but of course there are some risk factor. I will highlight the risks and you decide whether is that reasonable or not. Of course, for me it's not, but then end of the day you decide, and how you decide, you compare with the other 5 stocks later. Okay, let's go. Standard process. So for the benefit for those who are joining us for the first time, I am actually using a very standard framework to analyze my stocks. Maybe just for those who first time joining us, can you remember now what is the 3 main analysis I do? Every time I look at a stock, what are the 3 main analysis I do to help me analyze the stock? Anybody can help to answer. First is, of course, business analysis, then followed by what analysis? Can I get someone to help me here? So first is business analysis, followed by what analysis? Financial statement analysis. Thank you so much. And then followed by pricing analysis. So these are the 3 things: business, financial statement, and pricing analysis. Okay. So I am actually using a very standard format. You can see that, I do is everything is very standardized, so that eventually you want to do that for own company is actually quite easy. Now, for business analysis, first thing is understand the company. What do they do? Okay, Keppel DC Reit, quite obvious. They are data center REITs. Currently, now they have 21 data centers across 9 countries. So they have actually expanded overseas for those who didn't know about it. And yep, potential data center assets for acquisition is actually more than 2 billion. Okay, so all this you can actually get from their website, investor relations. So it's always good to have an overview of the portfolio. Now, one bad thing about Keppel DC here is this. You can see that for Singapore, for those properties in Singapore, their lease can be shorter. Okay, the land tenure can be shorter. One of them, can you see, is actually going to expire in 2041, which is just less than 20 years away. Okay, so after 20 years, the government could actually take back the land, and then that's it. The property is no longer belong to the REIT, and of course don't belong to you. And like, for example, this one, that's she going to expire on 2025, okay, with the option to extend by 30 years. So how much to pay to extend? So again, at least I cannot find the information yet. So if you ask me, this is something I definitely don't like. So you have actually land going to expire, going to return. And even I don't return, okay, there may be some cost involved. How much is it? I don't think this is announced yet. Okay, so you have actually a risk factor there. Okay, so this is where their property. So Singapore portfolio is actually still quite substantial, 54%. That means out of this 54%, okay, their expiry is actually going to be between 20 years to, okay, the max is about 2050. 2050 is 20 to 30 years, which is not long. Okay, so if you ask me, this is the bad point about this portfolio. Okay, I'm quite sure they also realize it. That's why they actually expanded overseas. For most of the overseas one is actually freehold. Okay, not all, definitely. Most of them will actually be freehold. Okay, the China one, of course, is also restricted. But let's see how big the China one is also. 4.2, it not say very substantial. If you talk about places like Australia, UK, all these are usually freehold. So there's actually indeed one bad point there for Keppel DC. I will always look at their occupancy. The main thing when I do business analysis for REITs is actually to find the occupancy. So occupancy is 98.7%, very good. I just need it to be more than 90% and pass my test. What is WALY? WALY is weighted average lease expiry. Okay, that means the tenant on average, how long the lease will expire. So just now I was talking about land tenure, the expiry of the land. Okay, expiry, the land give back to government. This is the tenant. Okay, the tenancy expiry. So 7.7 is actually very good. Okay, in that sense. Okay, maybe I'll ask you this question, then it's better for the member. If this is longer, okay, that means the tenancy is more stable or less stable. Can I get you to answer this question? If let's say this is longer, that means the tenancy is more stable. Thank you so much. It's actually more stable. Then you don't expect like, every now and then you need to go and find new tenants. So basically, it's actually quite stable. Stable tenancy means what? That means you have a stable inflow of the rental income. Also, 7.7, relatively speaking, is actually considered quite long. So, yep, I think this is a plus point. Okay, so under business analysis for REITs, most important to me is the dividend profile. And down here, what I look at here is the dividend growing or not? Is the dividend growing? And I do like what I see. I'm sorry. Oh, what happened? I do like what I see. You can see that the dividend has been growing quite steadily. Quite happy. And this is exactly the reason why I think that, hey, dividend growing, price come down, doesn't make sense. I always believe that the market is irrational. I always believe that the market is irrational. Of course, you all can disagree with me. And that's why when I see irrationality, instead of questioning why like that, I take action. Okay, so that's me. Of course, I have my fair share of failure, but so far not too bad. Market came down, dividends still strong. Don't always think of there must be something bad. There is something bad. To me, it's the market just went crazy, and then I'll just take my action. Okay. So that's what I do. If you really want to be picky, you can see that their performance is actually not as good, or at least from the first quarter 2022. The revenue has came down. That property income has came down, but if you ask me, this is not significant. Is it going to continue? I don't know, but I am not so worried. So the other thing is Oh, I'm sorry. The other thing is, if again you want to be really picky about it, the price to book value is actually a bit high. You can see that the premium to NAV is about 71%. Okay, the price is about 195 now. NAV is only 133. So very high premium. Oh, so as we all know, our price to book lower, the better. We have some REITs, in fact, the price to book is below 1, and this one is about 1.5, 1.6. So it's actually quite high. Okay. Personally, I'm not bothered. Why? Is because I don't use price to book to value REITs. I look at dividend yield. Oh, but if you want to ask me what are the bad things about Keppel DC Reit, I think these are some of the bad things. Also, this is the business. I'm still doing business analysis. So again, what have I done? I have looked at the corporate profile, understand the business. So for REITs, very important is what is their property. Okay. Then I look at the occupancy rate. Occupancy rate to me is the most important under business. I look at the dividend profile. Okay. Income profile. And the other thing is I look at the outlook. Data center has always been very interesting to me. If you like numbers, okay, we can actually go through some of them. Is worldwide spend on data center grew by 10% in 2021. Okay, so basically the demand for data center has always been increasing. Global mobile data traffic expected to grow at over 40% between 2022 to 2025. So if you ask me, the demand is still very strong for data center. But this report is by Keppel DC. Okay, I'm not sure about its independence, yeah, but I do believe what they say here. Okay, so that's how I do my business analysis. So by the way, I will be sending you all this recording. Okay, I'll be sending out the recording. Again, I strongly urge you all. So next time you can just follow this format exactly to do a business analysis. The corporate profile, the dividend profile, the occupancy rate, income profile, and the outlook. Also, just these few points for REITs. Now, let's looking at financial analysis. I actually look at three things here. Number one, leverage. Anyone can remember to meet my criteria, this number must be less than how many percent? Can I just trouble someone to share? Leverage. Thank you so much. Less than 40%. So this is a pass. Interest cover ratio, this number must be greater than how many percent? 3 times. Thank you so much. So this is a pass. So the other thing I look at here is this. I actually look at the debt maturity profile. Is there any particular year whereby you have a huge debt maturing? So in this case, what is considered huge for me, more than 35%. And that will happen in 2027. Also, it's still a bit far away, so I'm actually not so concerned. Okay, but if let's say we want to be very structured about it, so more than 35% is actually considered significant, and it is for 2027. Okay. Okay, now to the pricing analysis, I actually use fair yield. Okay, where do I get this fair yield? Is on my website. So just in case for those who have forgotten, let me just share with you where you can get it. You go to financialmall.com. So by the way, I've been updating the DCF figures. Hopefully you have been using the numbers. Let me just log in. Membership. View. Okay, so you Keppel DC. Okay, 3.96. So how I derive this number is this. This is the average dividend yield over the past 3 years. Average dividend yield the past 3 years. So I use this as a benchmark. Okay, so basically, Now the current yield is how much? 5.05. Fair yield is 3.96. Current yield higher than fair yield. That means the REIT right now, is it overvalued or undervalued? When you have current yield higher than fair yield, that means the REIT is over or undervalued. Thank you so much. That means cheap. So to help you all remember, dividend yield higher, better. So in fact, this is one of the main reasons this REIT caught my attention. Keppel DC Reit, the yield has not been more than 5% for the longest time. The last time I see this REIT, the yield more than 5%, I think easily 5 to 10 years ago, if my memory didn't fail me. So now 5%, yes, probably something is not good. Okay. If you ask me, the most concern I have is here. But I believe the price drop way compensated. So I have also tried to dig up the news. I don't see very significant bad news of the company. So at least on the date that I do this analysis, is any bad thing going to announce tomorrow? I don't know. But at the time of me doing analysis, I don't see very significant bad news. I think the price has dropped to a very attractive level for me. And yep, since I need to buy an income stock all the time, this definitely caught my attention. Also for income stock, it must be, for my income stock, I do regular investing. So I would definitely buy something, just a matter of more or less. So this must be one of the lowest dividend yield for REITs for you. Yes, you are correct. Yeah, I still haven't got myself to buy Parkway Life REITs. So Parkway Life REIT is a very good REIT. But the yield is miserable. I actually haven't buy that. Yeah, you are correct. I think this is one of the lowest rate. Thank you so much. Any particular reason that many REITs price drop? So obviously is the interest rate. If the interest rate go up, theoretically speaking, it will actually affect all the REITs because they have to pay higher interest. So that's one of the main reason why all the REITs price actually drop. Okay, but then in fact, a lot of the interest is already fixed already. They are on fixed interest. Okay. The other reason, yeah, maybe it's actually good for me to show us since someone asked. Okay, there's actually this report, actually quite interesting. Securities, you look under research, under sector. Okay, there's this S-REIT report that is actually updated every month updated. And if there's this chart, I will look at. Oh, yeah. Okay, pardon me. I have to search a bit. Come on. Okay. This one. Use spread. So a lot of professional manager, they actually use this to help them to see whether the REITs is it cheap or expensive. They actually take the dividend yield, which is the blue line. Okay, blue line. Minus off the bond yield. Okay. They take a dividend yield minus the bond yield. Now, question, the dividend yield minus the bond yield is called the yield spread. Yield spread. So when the yield spread is higher, that means the REITs is cheap or expensive. Okay, a bit tough. Okay, here's the question. Number one, what's the yield spread, which is the green line? The green line is the difference between the dividend yield minus the bond yield. Okay. So now the question here is when the yield spread is high, that means the REIT is cheap or expensive. Thank you so much. It's cheap. And when the yield spread is low, okay, that means the REITs are expensive. So answer to Robert's question, this is probably one of the reasons. If let's say I'm a REITs fund manager, I see this, I also quickly go and sell. Okay, I also quickly go and sell. That's what I would do. So unfortunately, the fund manager don't really think like us. So they have more options. So what the fund manager is doing is they will sell already, then go and buy bonds. But for me, I have a different investment objective. I just want to buy and keep. I just want dividend over long term. And so I'm not like the fund manager that sell already, can go and buy bonds, things like that, so on and so forth. Okay. But if you ask me, this could be one of the reasons why the general REITs market is coming down.